Some record drops is what we're seeing in the metal space as that precious metal rally that we've seen all year long, just unwinding in a severe form right now. If we take a look at our Wi-Fi Interactive, you'll take a look at gold futures down 7%, but at one point they were down more than 11%. Spot gold has seen its biggest drop since the early 80s. Also, silver seeing its biggest drop on record. Silver futures down more than 26% right now. Now, you could say that Trump's pick of the next Fed chair, Kevin Warsh, he's seen as more of a hawk, so that doesn't bode so well if you're looking at a weaker dollar, more looking at a stronger dollar. But traders will tell you that, look, this rally was ripe for a pullback, for a correction, given the speed of this rally. If we just take a look at where we're at with the U.S. dollar index, we have seen that moving up. Also, Mike McGlone over at Bloomberg just noting that there's always sound fundamentals when it comes to reasons for a rally, but the price action, the speed of the rally is really what was so concerning with these metals, and the deficits can shift very quickly. Do want to point out what's been happening with Bitcoin, because amid all the volatility that we've seen with commodities, with stocks as well, Bitcoin holding up just around 84,000 per token. 10x Research writing a note today saying that Warsh is seen as more of a hawk, so wouldn't bode so well for a crypto rally, but nevertheless, crypto today holding up amid all that selling that we're seeing across the board.
Dan Ives coming to you. Apple, you like this quarter?
Look, it was a phenomenal quarter. I mean, if you think about what we saw specifically with iPhone in China, I mean, that was robust tailwind, services strong. Look, but I think the issue with the stock, I mean, investors, it's all about AI. Investors want to see what the strategy is, what the monetization. Obviously, it's Cook keeping it, sort of close to the vest. But I think that ultimately is really going to be the key to why, we're bullish. And I think what you see is this is almost a sleepy, sort of pretty massive upgrade cycle that's taken place.
Dan, are you in a Wedbush office? I've never seen you in the office before. It's a lot for me to take in, Dan.
Look, there's a lot going on, Taz. I had to, I wanted to kind of blow your mind. So I'm in the office today. And, again, it's Friday. Who knew?
Well, count my mind as blown. Melissa, over to you. Dan brings up a good point, talking AI and Apple. How much AI initiatives for Apple, AI, the broader environment, how much of that is priced into Apple stock, you think?
Yeah, it's a tricky one. First of all, happy Friday. Thanks for having me on. I mean, there's a couple of interesting things going on from the quarter. I mean, they beat Visible Alpha consensus on the top line pretty nicely, and also at the gross margin. But what really stood out to us was China. China beat consensus by over 20%. So I think, when we think about AI and we think about the second half, the question's going to be what is going to be the catalyst for those numbers? What's going to drive top line? What's going to drive further upside in the gross margin? Is China going to be sustainable, and are they going to pull something magical out of their hat in the second half around AI?
Is that magical thing, Inez, you think it's this Google Gemini? I mean, Big Tim, he didn't want to get into the financial ramifications of this type of Google, but I mean, it's hard to tell how excited he was. That's just Tim Cook, but he sure seemed excited, and he sure seemed to think this could be a big lift to Apple over time.
Yeah, and it may be the perfect partnership for them, at least for the time being, and them having such a massive quarter. This could give them the runway, so to speak, for a even broader AI strategy later on. So even though investors were so concerned about AI last year, this could be a stopgap measure, as Dan Howley had been mentioning earlier, and this could be the perfect fit for right now. I thought that what was interesting was the memory comment on the earnings call, because that seems to be sort of a bifurcation that we're seeing now in the market with respect to some of these memory names that have been skyrocketing, and the demand, the bottleneck when it comes to memory.
Oh, you're seeing there around the screen that move in SanDisk, Dan. I mean, holy SH star T. I mean, I don't know how do I put it. I mean, if you have missed this run in SanDisk, I would even say Micron, do you buy, or is this just going to end badly?
No, look, it's a super cycle in memory. I mean, that's the reality. I think if you look at what's happening, and we see it with like SK when we're there in Korea, Micron's part of the AI 30 list, in terms of that we focus on. Look, I think this is it's picks and shovels, right? In other words, like this is a fourth industrial revolution. And I think investors, what you see in SanDisk today, what you've seen in these numbers, it shows, it's still early days in this just massive cycle.
Melissa, what really impressed me with Apple, a lot of things, the iPhone revenue, but Tim Cook got on that earnings call and he said, you know what, we're going to drive higher margins in the first quarter, higher than the street expected, even with these these higher memory prices, these memory chip complaints. Isn't that the ultimate buy signal on Apple?
I mean, ultimately what was a surprise was the gross margin, especially coming into the outlook. I mean, they guided 48, 49% gross margin. Visible Alpha consensus was 47.5, and we're currently at 47.5 for the second half. So that's what the market has priced in. So as my other two guests alluded to around memory, this is the question. Is Tim Cook going to be able to manage the supply chain and memory prices in a way that enables them to maintain and sustain those 48, 49% gross margins, or is the 47.5% the real number?
And as I promised, I'm going to get you on precious metals in a second. Hold on just a moment. Dan, while we're cheering Apple here, Google's going to report soon, probably a good quarter for them. I'm going to talk up Gemini. On the other side, this move lower in software stocks, SAP, Salesforce, ServiceNow, this has been abysmal. I mean, do you try to pick a bottom here, or do you just stay with the winners like an Apple and a Google?
Look, software, it's a guilty till proven innocent. And I think ServiceNow and obviously Microsoft and others, I mean, this is just on the street right now. It's almost a do not enter zone. Now, I think a lot of that maybe is overdone specifically for some of the cybersecurity names, for even Salesforce and others. Look, it comes down to monetization phase. And that's what the street wants to see here. And I think what you're seeing is really a bifurcation in tech. It's kind of the haves and the have-nots. And that's really what's playing out across tech earnings season.
And as wild moves in precious metals the past 24 hours.
Incredible what we've seen with the moves in precious metals. We're looking at now gold that's down about 5%. It's at around $5,000 per ounce. You just had yesterday morning, it was touching around 5,600. So it's a massive move to the downside. Silver as well, down 13%. Mike McGlone over at Bloomberg is basically saying you may have just seen the top on silver, and this could be for years now that you won't see those same silver prices as you've seen. He's been warning about this massive speed in this rally that we've seen. And we're also looking at other metals as well that are down. I mean, you're looking at copper. Also, copper was up around above 14,000 per ton in London, and that has also moved lower. That doesn't take away from sort of this narrative that we've been hearing about, is the demand for these metals, for the demand for copper that you're going to need for data centers, for electrification, et cetera. But look, there's inelasticity when it comes to that, because a data center is not going to stop being built just because you've got higher copper prices. But nevertheless, a lot of this has to do also with China's speculative trading as well. So analysts had been warning this parabolic move. You can't have these types of parabolic moves without having some type of a downturn at some point.
Melissa, humor me on this. We started this session today with news that President Trump has nominated Kevin Warsh to be the next Fed chairman. If you're out there, and I'm going to get this question for people, so I'm going to put it right to an expert like you. No pressure, right?
No pressure.
No pressure. Does Kevin Warsh, how much of a factor should he be when you're trying to pick a tech or media stock to invest in? Should you even be thinking about who the next Fed chair will be? Why or why not?
I mean, ultimately, it's going to be about policy and their view about interest rates. Interest rates are an important dimension to the way that the market thinks about asset allocation. So I think if his view is to lower interest rates and take a much more dovish stance around rates, that may be a signal for small cap. It may be a signal for some of the riskier, more unique areas of the market. It may also be pretty bearish for the dollar. That we've been in an environment where the dollar has been very strong. And so if we see that start to reverse, it could change some of the dynamics in the market.
Let's start with the news of today, Tom. So we got this new wild card, right? President Trump says, Kevin Warsh, that's my guy. That's who I want running the Fed. What do retail investors say about that? What was the chatter on stock twits like?
Yeah, a lot of confusion, I think.
Confusion.
Yeah, ultimately, Kevin Warsh is seen as a bit of a hawk in terms of his demeanor and how he approaches monetary policy. And then you've got Trump, who's basically saying, whoever I pick next is going to lower rates.
Although Warsh now seems to have shifted a bit there.
Yeah, so it's an incremental change. I think the market is responding due to some of the extremes we saw in the dollar index, silver, gold. We're seeing mean reversion happen there because of this new information. But overall, there's still a lot of uncertainty. There's still time until May when Powell's ultimately out. So a lot of things are going to come out and change between now and then. So we'll see. But right now, the market is viewing this as a bit more hawkish than expected.
Can I ask you, how do retail investors, do you think, how do they sort of broadly think about the Fed? Like, do you have line of sight there how fans on stock twits feel? Do they trust the Fed?
Yeah, it's a bit of a hard thing to quantify, right? But ultimately they care about interest rates because if you're investing in high growth areas like retail is, lower rates help those areas, higher rates hurt them. And so they're really looking for clear communication, clear guidance. And I think there's been this underlying feeling that maybe Powell and the Fed have been a bit behind the curve on inflation, hiking rates too late, maybe being a bit too, hesitant to cut rates. So there's a sense that the Fed is incredibly important, but sometimes they don't communicate as well as retail would like.
Let's switch gears. Let's talk about what stock twits fans are trading right now. You mentioned the metals.
Yeah.
I mean, gold and silver, of course, we've taught blistering runs, but today getting whacked. Which metals interested them?
Yeah, silver has been trending, the run in metals started most of last year, right? Gold was up 100%, gold miners up 130, 150%.
Just
so it was
parabolic moves.
It was broad-based, but it wasn't really until December, mid-December, that we saw, retail and public participation really start to escalate. You saw TV commercials about gold. I was getting texts about gold from friends. So we saw that escalate, and as you see with kind of the financialization of markets, for context, the SLV ETF traded $40 billion worth of shares today. That's like one of the most highly traded assets on the market. In terms of the number of physical gold being traded in any given day, Monday and Tuesday, we saw in the futures market, the amount of notional, tons of silver being traded was 2 years worth of production in the mine. So we're seeing a disconnect between the speculation side of things and the actual physical side of things, which I think is kind of correcting right now as we see this leverage start to come out of the system a bit.
Now, just to bring it back to what we began talking about, Warsh, there's this storyline today in the markets. Okay, Trump nominates Warsh. As you point out, Warsh historically we think is hawkish, right?
Yeah.
Concerned about inflation. That helps explain this whack that's going on with gold and silver. What do you think of that?
Absolutely. I think it's, the conditions were set, and this was kind of the match that got it going. Anytime you have silver went from $40 last year to 120, and a lot of that move happened in the last month or so. So anytime you get that level of aggressiveness to the upside, it doesn't take a whole lot to get sellers to really take control again. And I think that's what we're seeing. I think the overall consensus, though, among metals investors is the longer-term thesis remains intact, but we got a little silly here in the short term, and they're looking for prices to stabilize and then ultimately get back in for the broader theme of inflation reaccelerating.
So you mentioned the metals. What about Zoom and health insurers? Why are those on the stock twits radar?
Yeah, it's been interesting. Software stocks have been absolutely killed. I'm sure Jared and your team here at Yahoo has covered that in depth, but the AI trade against software has knocked a lot of big names, Adobe, Salesforce, Trade Desk, these names are retail favorites down 50, 60, 70%. And yet we're starting to see Zoom, which was a pandemic or a darling, hasn't really participated in this tech rally over the last couple of years. It's starting to break out. It hit its highest level since August 2022 this week. And the overall catalyst there was, funnily enough, an investment that it made in Anthropic. So Anthropic is raising money at a $350 billion valuation. Zoom had made an investment back in its Series C at a way lower valuation. And so they're sitting on this asset that analysts estimate is worth $2 to $4 billion. Zoom only has a market cap of about 25 billion. So that put it back on people's radars. Combine that with improving technicals, and you've got a pretty interesting setup heading into 2026.
Can I also ask you about GameStop before I let you go? Because you point out, listen, we're at the 5-year mark here, the anniversary of the GameStop moment. You know, you followed that closely, Tom. Over those 5 years, I'm just curious, for retail investors, what broadly has changed? What stayed the same?
Yeah, in terms of what's changed, I think Wall Street and companies' attitudes towards retail investors have changed significantly. Retail is here to stay. They now make up 20 to 25% of the average trading volume on any given day.
And you point out companies actively recruit those retail investors.
Yeah, they're courting them, right?
Yeah.
If you want a diversified shareholder base and you're not engaging with retail at this point, you're missing a massive opportunity, which is why StockTwit sits in the center of this ecosystem. It's a critical platform for companies, CEOs, executives to be able to reach out to shareholders, understand what their concerns are, get their message out there, and really engage with them to create a strong shareholder base.